that is supply and demand and imbalance. So now let's cover continuation and reversal. So continuations are obviously following the trend, and reversals are obviously reversing the trend. There are conditions that we have conditions to trade either one, but we're not going to go into that too much. And obviously we even know when the continuation will actually become a reversal. So as you can
very
see,
important also, maybe again, don't get too excited about this trend. No, we're not trend traders and stuff, but sometimes of course it makes sense to trade in a line with the trend, right? Of course, but it's not based on we are trying to be trend traders and stuff like that, right? It's just again very helpful to not get caught into all these reversal trades all the time. So of course, sometimes you can trade in line with it also.
Yeah, exactly. And as we can see here, we have our build-up of orders. Price comes back in to our demand zone, likely fills some imbalance, and then continues. Same here, except the opposite, of course. We have our build-up of orders, price pushes away, and then we come back, fill the imbalance, and come back to the supply zone. So let us go over a couple of examples. So here we also have what we covered a little bit beforehand, which is supply and demand and continuations in line, combining that with imbalance. So as you can see, like we said, 3 candles to create imbalance. So the imbalance is from here to here. In this case, it's from here to here. So that should all make sense.
And again, if we go back.
Of course.
So again, let's slowly can see that's where some sort of sense slowly comes into it, and that's where you probably understand why we digged into this basic shit first with supply demand, then imbalances, and then combining it slowly but surely with a few more stuff. But you will see in a few minutes that everything will make much more sense. But you can see we made out of a huge supply demand area, right? Again, breaks out, should come back, but then we're using the imbalances usually on lower time frames, right? Obviously you can stay on the same time frame as well, but to refine and have a better understanding of where price is most likely to tap into in these huge supply demand areas, right? So again, we slowly but surely refining it, and of course can refine in terms of, is it a continuation or is it reversal? But it's the same stuff. So we slowly but surely refining zones. But again, of how to find these zones, everything will be covered later. But as you can slowly see, we're building the sense into it, okay?
Exactly. So let's go into this. And again, so now we're going to, obviously beforehand, we were taking supply and demand as, this build-up of candles. But when we get into it with imbalances, what we can do is we can learn to take the actual candles themselves. So if you're looking for a buy, which would be in this case, you actually take the demand candle is the last sell candle. So that would be this one here. And then obviously if you're selling, it's the opposite. It would be the last buy candle. So that's what we mean by this supply candle and this demand candle. So now we can sort of dig into, as you can see, we're showing a little bit of liquidity here, maybe getting into things a little bit more. So let's jump in. These are the different variations of them. Obviously, we're not just saying that, oh, you're just going to have imbalance here. You can have imbalance here as well. In this case, obviously, imbalance here. In this case, basically what this is let's say you want a better chance of being tagged in, then you can take this instead of just taking the demand candle. Same here, you can take this. It's basically down to personal preference. So,
yes, so if you stay on this quick, again, as you can see, there's not this ultimate guideline of you always have to use this specific candles. But as you can see, there's multiple variations to it. So, but as you already can see of how to do it, like, again, using the imbalance to find out what is the candle that more technically price probably has to be filled. And then we use the candle below that, or again, we switch this around the next slide of above that. And then this is our so-called then refined, in this case, obviously demand candle, right? And that's where price then should tap into, because of course it fills the imbalances, but also taps back into these demand areas and then is ready to go out of it. So how to refine these zones, as Cam said, you have multiple different variations to it. So just again, maybe you print this out or just note this down, because of course this right here is obviously our ideal scenario if price looks like this, if this candle, again, is the last down candle, and also left imbalances above that. This is our ideal candle, but sometimes, again, it can look a little bit different. Like, for example, this candle is higher in here, so you either can stick to this candle to the low side, or even take this one and say, okay, no, maybe I take this one because the imbalance is filled here. That's the next wick in here. Maybe it doesn't come back to this candle in here. That's also possible. That's where, again, price will be very different from time to time. It's not, for example, we call it over refinement also. Let's say price did something like this, but later on you will have, like, let's say 15 confluences, the price should go higher, but you over refined it and price tapped into here and then is off. And then you missed out a huge trade because you just over refined it into this candle. But again, maybe it was done into this because it filled the imbalance already. So that's where, again, Cam said, you have to find your personal preference of when it makes sense. And again, of how good the setup actually is. If this is a 10 out of 10 setup in here, I would rather take it like in here and not missing out on a trade if it comes in here. If it comes back in here, okay, that's fine also. You're just having a 1 pip different entry later on, but at least understand for now of this is how we use to refine these zones. Again, as you can see, can either take it in here, or even, for example, this candle if it's bigger, or again, you can use this one instead. The only thing you have to be aware of to not do this. You always should cover the lows if it's the extreme, right? Again, if you're running the risk, again, if it's like, if you're taking this candle in here, again, technically price can tap into this point of interest all the way until here is still valid and then goes high again. Of course, this is not the nicest ideal scenario, but you have to be careful about these zones all the time, right? And of course, if it's the other direction, add spread a little bit also. So again, as you can see, huge imbalances from here. Technically, you just marked it up in here, but as you can see, it's technically all the way. You just didn't want to make the gray box too big, right? And then this is, of course, some sort of liquidity grab in here. We dig into it later also. Left imbalances. Again, in this example, we're just using this down candle, right? It should be something looking like as we had it in here, right? So this, for example, would be this example. As you can see, price comes, first fakes the imbalance fill, gives a false reaction, comes back lower, taps into now this refined demand candle, and then is out of it. So guess what? If you refine it too much and say maybe I take this candle in here, like this one, then again, this zone would have been missed. So that's where this personal preference comes in of how to use it and how much opportunities you want, or if you want to even not even trade the extreme at all, because again, you will dig in how to use this properly. But for now, just get these pictures into your head of how to refine these bigger, again, supply demand areas, and then refine it into just one candles using the imbalance for helping you, okay, to make these zones very precise and obviously having a very good understanding of where price actually should tap into and fill the market properly, right?
Yeah, makes sense. So we'll just quickly show you the other way. So obviously this is all of our previous examples, just bearish. And here you can see we have our imbalance, we have our supply candle, price taps back in here and then continues.
Exactly.
So,
okay. And so, sorry, Cam.
go ahead, no worries.
Well, if let's say we have this zone in here, right? So this is obviously our supply demand area, whatever, right? And instead of whatever expecting, price will tap into this whole thing. Again, we're looking for where's the imbalance, then looking at this point above the imbalance, break it down into these candles, right? And then obviously find out, okay, what technically is my supply demand candle, like where's my imbalances. Again, you see this beautiful drawing, like looks even better than real charts. Imbalances would be here, right? From this wick to wick, this wick. And then again, it's our personal or your choice technically of what candle you want to use. Do you want to use this zone overall, right? Or do you just want to use this extreme, right? But again, then you're limiting or not risking it to not getting tapped into. And that's again where your personal preference comes. And that's again, you will find out very soon, because we show you multiple examples of how then to use it. For example, in this one, as we showed in here, we showed just using this candle again, without taking the bigger one. Again, this technically the supply area is all the way in here, right? But guess what? We're just using this candle for this example, right? And again, not maybe this one in here, but also you could have used this one, would have worked also perfectly fine. So that's again where this refinement comes into place. But of course, we're using the imbalance to orientation and refining these huge supply demand areas into at least smaller zones. Okay.
Yep. So let's get into some examples of this. So as you can see, this is this example here shown on the charts. So what do we have? Well, we have our overall demand zone, but then we have our imbalance here. So our refined candle becomes this one here. And again, little look to the future. We build liquidity above this zone before tapping in and continuing in that direction.
Yes, and then for example, for order flow later also of how you refine these zones, again, you can see just, again, this zone, for example, left imbalance. Okay, this zone, left also imbalance. Again, that's where things get a little bit more interesting. If it taps into some sort of demand areas, comes even back, fills again this imbalances, that's stuff which becomes very interesting later on. Again, same thing as you see here. Again, imbalance is left from here to here technically. Again, but then it's the over refinement if you choose this candle in here, right? Again, this candle, but you choose the low as well, right? So this candle, but you choose the low. Then again, it would have missed. But if you use the overall, let's say all these demand areas, it would have been tapped. But again, that's where the over refinement comes into place very soon. But again, no worries, we show you how to use this later on as well.
Of course. So next we have the ideal scenario, which is where you've got this little candle because this gives you the best RR, and then obviously your imbalance here, they come up, fill a little bit of this, go down, and then come all the way back up to our what would be extreme, and then fill this imbalance and the refined supply candle, and then continue in the intended direction. Same again here, except it's not very small, so it's not the ideal, but that doesn't matter. Again, look at all the imbalance we leave from here. We fill, and then fully fill it by also tapping into our refined supply candle and then continuing down. Also notice how when we leave these little imbalances, obviously there's a little imbalance left here, but we have this imbalance here that gets filled, and also this little imbalance here that gets filled. So the majority of these imbalances are getting filled and we're creating an efficient market. Next, we have this. So again, we show our intention by pushing away, and then we leave this imbalance as well as this imbalance. We come and fill the full imbalance while also coming into the demand candle and continuing away. Again, here we leave a huge imbalance with a very nice supply candle, tap back into it, complete the reversal, and again, continue downwards. Few more. Goes up. So this is our supply zone. This is obviously our supply candle, or one of the ways you can take it. Imbalance, we push back in. It would also be fine to take it like this as well. Here, supply zone, push away, leave our imbalance, and then again, supply candle, we come back, tap in, continue. Nice and simple. Same thing again and again. Imbalance, demand zone, demand candle, push off, continuation, like so. And then again, so what do we think is going to happen here? We've created liquidity, we've taken out that liquidity. Now we have left an imbalance. This here is our supply candle. So next, what do we see? Well, we obviously see a fill of this supply candle. If you had have over refined, you likely would have missed it. And now what do we see from here? We now see what Reem spoke about a little bit, and what we'll get into a little bit later is our order flow. So now we have here imbalance with our supply candle. What do we think price does? Taps into it and continues in that direction. Again, very similar. Liquidity taken, imbalance left, supply candle taps in. Imbalance, supply candle taps in before obviously continuing in our direction.